what we needed was a catalyst. We needed a policy response. And so the policy response came in and it was significant. And you had a very, very sharp move to the upside. I mean, the biggest three-day gain we've seen since the early 1930s. Now, where we are here is you'll need another catalyst. And so, for the credit markets, the Federal Reserve is providing a lot of support. So we'll be watching that closely. That tends to be the canary in the coal mine. I don't expect credit spreads to blow back out again significantly unless we get some really terrible news in terms of the number of new cases and how long we're going to be shut down as a society. But ultimately, that's what it gets to. We've seen the monetary response. We've seen the fiscal response. And now we're left waiting to see how the medical community can get out ahead of this. Ultimately, we will get through this. Households were in good shape going into it. The banks were in good shape going into it. It's just a matter of how long this persists until we can really start to bend that curve and get the number of new cases down. Jim, could something like housing lead us out of this?
Hi, Kelly. I mean, it's a pretty small part of the economy in general. I mean, I think you have to think about the economy broadly in terms of even just looking at the jobless claims number yesterday, the 3 million increase. And of course, they don't have precise details, but it's certainly the hotel industry, the restaurant industry are front and center of that. But just more broadly, I think the whole economy, to some extent, is shutting down right now. And I think there certainly should be some comeback by the second quarter, by the third quarter, rather, if the shutdowns start phasing out. But the question is how much damage is done in the meantime, how many businesses go out of business, how many people are let go, and you're left with a higher unemployment rate and maybe a recession dynamic, which still has some playing out to do. So I certainly wouldn't count on the relatively small housing sector alone to bring us back.
What about phase 4 fiscal stimulus? Because, we're already going down that road, aren't we? I mean, people are worried about the health of the states, among many other factors.
Well, phase 3 is pretty big. I mean, it's they haven't really given us a proper total yet, but we aggregate the numbers in there when you include tax deferrals, 2.5 trillion, which is 12% of GDP. Now, that's going to be spread out over time. About half of that is loans and tax deferrals rather than what might be called pure fiscal stimulus. But it is pretty sizable, and I think over time that will help. But for sure, it looks like there's going to be a phase 4 as well. And I think as we see the depth of the recession over the next couple of months, I think yesterday's claims number is just a taste of that, then we will probably have more and more pressure for phase 4 as well. But ultimately, yes, there's a lot of stimulus here. On the other side, of course, there's a lot of downward momentum. Ultimately, I do think the stimulus will be powerful enough to contribute to a recovery and certainly limit the recession. But in the meantime, we're going to see some pretty dramatic weakness in the economic data.